So now let's talk about what does all of this mean for you. We've already established the fact that an LLC, in our example, is a legal entity established by your state. It has to be assigned a tax status by the IRS, and a single member LLC by default is going to be taxed as a sole proprietorship. It's the exact same type of Schedule C tax return that you're used to, having no business entity at all and simply taking your commissions through a 1099. Now, how does this affect you in practice? A common thing we hear whispered around is people who are in business, whether you're self-employed or whether you own some type of business, are actually taxed more than if you made that same money on a W-2. Well, here's the truth of the matter. It's actually a very double-edged sword. For most real estate agents, the sole proprietorship is often not the most optimal business entity. There are exceptions, especially now with the 2018 Trump tax cuts. But generally speaking, it's not always going to be the best thing for them. So because of this, they may find themselves being taxed more on the same income on a 1099 than they would have made on a W-2. So if you used to make $150,000 working in corporate America and you were paid through a salary on a W-2, taking that exact same income through a Schedule C via 1099 will most likely see you paying more money out in taxes from yourself personally than if you had made that money on a W-2. But that may not always be the case. If that is the most optimal entity for you, or if there's another entity type that's even more optimal, you can find yourself making that same $150,000 and actually paying much less in taxes. And furthermore, this is only as it pertains to how you're reporting your income. We're taking for granted all of the different deductions, advanced strategies, and tax loopholes that can be applied to business income that are not applicable to W-2 income. But from a sheer standpoint of reporting your total net taxable income, it is very much more possible that when fully optimized, you will pay less on the same income through a 1099 than you would through a W-2. The drawback and caveat of that is if you don't optimize your business entity and you don't have a tax plan, yes, you more than likely will pay much more taxes on a 1099 than you would on a W-2. So in the next video, we're going to wrap this whole series up and keep it nice and short for you. We'll talk about the 4 different ways that an LLC can actually be taxed. And we'll hit on a couple of different other entity types and talk about their tax implications as well. See you in the next video.